The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Welcome to Squawk Box Europe. I'm Karen Cho with Steve Sedgwick. These are your headlines. The U.S. and Iran resume strikes following the downing of an American chopper over the Strait of Hormuz, with Iran saying they have targeted U.S. bases in Jordan, Bahrain and Kuwait.
The tech sell-off accelerating in Asia, with trade on the Kospi briefly halted again. The negative sentiment spreading, with the US and Europe set to trade in the red. Plus, SpaceX closes its order book later today ahead of what's set to be a record-breaking IPO on Friday, with reports suggesting it is as much as 4 times oversubscribed. Right, a very good morning. Just before we can, is it time for us to stop saying the Kospi and stop saying, dare I say it, the Nasdaq, and just say, oh, those 2 stocks which dominate the Kospi and those 2 or 3 stocks that dominate the Nasdaq? Because you and I were talking earlier on off air about the change of the rules that are going to mean that the Nasdaq allows SpaceX in pretty much straight away, and that's going to have this high weighting, and it's going to affect the passives and all that as well. And Jordan was sending some stuff out, our producer. But the fact of the matter is, we talk about the Kospi going up aggressively and down. I wonder if we're scaring the horses. It is SK Hynix and it is Samsung, and the rest of the stocks are almost irrelevant in the Kospi at the moment.
Well, typically we wouldn't be talking about the Kospi anyway. We would talk about, say, the Japanese stock market, the Chinese stock market, but it's become so relevant because of the AI trade, and I do wonder whether that is now the momentum trade that's actually very easy for us to watch if it comes off aggressively. We know that there is a wobble taking place around the AI story, so it's actually a very easy way for us to keep up to speed with what is happening across Asia.
But we've always talked about the Mag 7, they are the dominant position in the S&P 500, but now it's become such a crazy, because of these high valuations as well, such a concentrated Samsung, SK Hynix for the Kospi, and will be, dare I say it, Anthropic and SpaceX and OpenAI if they get their listings and they get their early adoption into the Nasdaq, and then the passives have to follow in as well. And it's just crazy levels of concentration, the likes we haven't seen for a very long time.
Well, the Mag 7 stocks are now almost boring. It's the parabolic stocks that we've been watching. And I think that's what we're seeing out of South Korea too. It's the parabolic names around memory chip that are you really seeing that pendulum swing on a daily basis. Right?
Yeah, for sure. Okay, in the meantime, the US has carried out fresh strikes targeting Iranian military sites in response to the downing of an American Army helicopter in the Strait of Hormuz, further straining an already fragile ceasefire. Iran has launched strikes in response, with state media saying forces targeted US military bases in Kuwait, Bahrain and Jordan. But this is the really fascinating thing. And look, I will hold my hand up as well. When I look at the oil price, I cannot believe where we are trading. I cannot believe we are as low as we are, despite the fact that we've rallied 50% to these levels from our lows before the war. A lot of people, a lot of experts have told Karen and I and others that there is a massive shortage of product out there as well. And yet, look where we are. These are moderate moves. Trust me, these are moderate moves compared to the $140 to $150 minimum that many of the doomsters have been telling us we should be at. Dan, you've heard the same thing. You're at the epicenter in the Middle East as well. I cannot believe, despite tension after tension, concern after concern, that oil prices are so sanguine. That says to me 2 things. 1, there's a lot more supply out there than people expect, or perhaps even more stockpiles with the likes of the Chinese. And 2, demand destruction is going on. But I know you're talking about the bigger picture, so lovely to see you, my friend.
You too, Steve. Good morning. Just some reflections on the price of oil before we get into what we know in the region. First and foremost, I've spoken with analysts today who have suggested that because these strikes have been proportionate, at least according to the United States, that there is a limited risk of contagion that could ultimately result in a wider flare-up in the region. The other element to add here is that there could also just be some headline fatigue coming through here. We have seen this movie before, and this war is not necessarily new. So as a result, markets aren't necessarily pricing something new here. And of course, at the same time as well, the strikes that we saw overnight at least according to what we know right now, have not resulted in any impact on energy infrastructure in either Iran or across the Gulf states, which helps to also explain why we might be seeing this muted reaction. I'll add a caveat to that, though. Important to also see exactly what happens when U.S. trading gets underway. That's when real momentum starts to flow into these contracts. So we're watching and waiting to see how the price of oil responds. But of course, what we have seen is quite a significant escalation in the region. The U.S. and Iran exchanging strikes overnight, really raising fresh questions, I would also say, about the security of U.S. forces in the region, the situation in the Strait of Hormuz, and the real situation around where these diplomatic talks actually stand right now. U.S. Central Command saying American forces carried out what it called self-defense strikes against Iranian targets on President Trump's orders. CENTCOM saying it targeted Iranian air defenses, ground control stations, and radar sites, describing the attack as a proportional response. Iran also responding with its own military action. Iran's Revolutionary Guard saying it targeted U.S. positions in the region, including in Bahrain and in Jordan, while regional governments also reported air defense activity and interceptions as well. The United States launching these strikes in response to the loss of a U.S. Army Apache helicopter near the Strait of Hormuz. This is a really expensive, really sophisticated piece of U.S. kit. Exactly what happened out there is unclear, but President Trump has blamed Iran for that incident. For its part, Iran has denied deliberately targeting the aircraft. U.S. officials say the circumstances remain under investigation. Both crew members inside the chopper were reportedly rescued and are also reported to be in a stable condition. The rescue itself also marking quite a technological milestone, at least according to U.S. sources. CENTCOM saying an unmanned surface vessel or a drone boat, as it's being called, helped to recover those two soldiers off the coast of Oman in what appears to be a first for U.S. forces. So this is certainly getting a lot of attention online at the moment. Again, exactly what happened remains to be seen. Important to also say, I would contend that these strikes come at a pretty delicate moment too, because you'll recall we were speaking just yesterday about how President Trump had said the US and Iran were basically in the final stages of a deal, one that could reopen the Strait of Hormuz and advance those talks over Iran's nuclear program. So for investors, the focus right now really shifts to whether this latest escalation is going to further threaten shipping through the Strait of Hormuz or ultimately derails the diplomatic effort that the White House insists and has repeatedly insisted is still moving forward after more than 100 days of this conflict. The message from Washington right now is that the diplomacy remains possible, but I think you also have to look at the bigger picture here. Missiles, drones, retaliatory strikes back in the headlines. The path to a deal looks more uncertain this morning than it did just 24 hours ago. It's back over to you.
Dan, thank you very much for the analysis. Let's circle back to markets and what we saw stateside yesterday. Again, a reversal. So it's been very bumpy this week. We've had a fairly strong sell-off, a buyback, a snapback, and now we've had some more selling that's crept into those very high-priced parts of the market where we've seen the rally that have been triple-digit gains around the AI story. So coming back again into the red, particularly for the Nasdaq to the tune of 1% versus the offset there being the Dow. So more traditional areas of the market where the props were coming through, real estate yesterday and also the banks. So for the chips themselves, this is the performance summer. Some are calling it the parabolic 7 when you take a look at the sector. Marvel, Broadcom, Intel, AMD, those stocks, as you can see, reversing. Some of them down heavily. Marvel in particular, a 7% drop, and you can see slightly smaller ranges elsewhere. What that's doing across in the Asian markets, very similar, the momentum that you've seen in the South Korean market, thanks to two stocks that have been riding the same wave that you're seeing out of some of those US chip players. It is also a fairly steep reversal today, and that's impacting the Kospi, as you can see, around the SK Hynix Samsung story. It is down heavily, 5% odd. Again, there's been talks about how the plumbing and logistics have been playing out in the South Korean market with some of the triggers, circuit breakers also being required here. So the Japanese stock market down to the point of 1.7%. Smaller range than the Kospi, still down heavily versus some of that red creeping onto the Hong Kong and China markets. To what we're seeing in terms of that Asia sell-off, and these are the stocks that are leading that sell-off across on SoftBank, Samsung, SK Hynix that I mentioned, to the likes of TSMC. So reversal very strong in these areas. I think that's one of the big talking points this morning about the Parabolic 7, as it's been named, and what it means for some big chip stocks.
Parabolic 7, is that
That's the title, yes.
It doesn't ring off the tongue. It's not, yeah, okay. Okay, I'll go with that. Victor Schwetz is the head of Global Desk Strategy at Macquarie Group. Enjoy. Victor, I'm looking at some of your copy, actually one from early June, 2nd June. Is the US equity market, but is it a bubble or is it sustainable? I think it depends really. It's a bit like the curate's egg. Some stocks look absolutely superbly valued. Others look, dare I say it, quite scary.
They are. All equity markets globally are incredibly concentrated. If you think of performance, if you take out 5-6 stocks in every single market, whether it's US, whether it's Korea, Asia Pacific, whatever you look at, the rest of the market is not really performing and haven't really performed. So the top 10 stocks in the US are now about 45% of market capitalization. The question is it the new normal? Or is it something that is going to broaden eventually or reverse? And that's what the market is trying to understand, because clearly the trend line is broken. When a trend line is broken, it doesn't mean you have a bust. What it means, you have no idea where you're going to go. And that's why the market keeps flip-flopping from one side to the other.
Victor, I put myself into a kind of market therapy at the moment because of the madness of markets, and I do it every now and again. And my therapy is with a chap called Benjamin Graham, and I'm listening to him again, which is the pivotal work which has led Warren Buffett, has led Charlie Munger, and that is The Intelligent Investor, because it reroutes me in sanity. Whether it was the railway booms of the late 1900s, whether it was the early 18th century, the South Sea bubble, whether it is the dot-com bubble as well, these things always come and go. So when you say to me the new normal, I say Benjamin Graham doesn't believe that there's a new normal.
I know, and that's why one of the things I've been describing is that we do not live in Warren Buffett's world. And there are specific reasons for that.
Do you disagree?
I do.
I remember people saying that in early 2000. This is great, Victor.
So do I. And I was one of those people saying that because I was in London during the .com. So I don't dispute that. Unfortunately, I've come to a conclusion that this world is actually quite distinctly different. And there are two reasons for that. Reason number one, access capital. We've been creating capital like crazy for the last 20, 25 years. You can measure it against money supply versus nominal GDP. So for the first time in human history, we live in the world of abundant capital, not constrained capital. If you think of Warren Buffett world or any of the other ones over the last 200 years, capital was constrained. It had to be evaluated very carefully. Today, capital is abundant. Anything that is abundant cannot be priced. So that's our first difference. The second difference, II is different. So one of my favorite quotes is from Kevin Drum. He said, "Industrial revolution changed the world, and all it did is to replace human muscle." This time around, we're not just replacing human muscle. And so the information age, when people talk about II, do we have II bubble? I usually say, what is II? Is it software? Is it hardware? Is it chips? Is it data centers? Is it robotics, automation, biotech, quantum computing? What is II? And the answer, II is everything. There is no difference between tech and non-tech. Technology is everywhere. So defining a bubble just gets harder because the way I look at it, we're rolling bubbles. We had a software bubble, okay, it's rolled back. We have chips bubble, it will be rolling back. And then we'll have applications. So I said anything from robotics to biotech.
It's a great way of looking at it. And to your point around the Buffett strategy and Berkshire Hathaway, I mean, who would be wanting to sit on records amount of cash at this point? I mean, we've had momentum in markets this year, triple-digit gains in some areas of the market. If you're sitting in cash as a major investor, you've missed out on a huge amount of upside.
Yeah, but the thing to remember, of course, in that world doesn't mean that certain parts don't get derated. It doesn't even mean that the market as a whole cannot get derated. But what you have to do is to identify where the next bubble is going to be. And that is why concentration of returns probably is going to stay high. Because the next bubble, when it comes through, all the winnings will continue to go to the winners. Losers will get nothing.
So to the point around where the money is going, you've done a report on the EM fund flows and pointed out there have been a lot of outflows over the course of May.
Yes.
Is this the casualty now? Because investors, if they wanted something spicy, if they wanted higher returns, they would chase emerging markets. Is there no need to segregate up the planet based on geography when we have an AI era?
That's exactly right. There is no difference. We're all the same now. There is no emerging markets, developed market. US is not special. Europe is not special. Asia is not. Japan is not. Nobody is special. So there is no need to differentiate. We're all behaving like emerging markets. But what it also implies, emerging markets usually do when you have a very strong global cyclicality, when a trade intensity increases and a foreign direct investment grows. The problem is, over the next 10 years, we're not going to have any of that. And so emerging market as an asset class cannot really perform or needs to rely for performance on new sectors and new industries. That is why Northeast Asia was performing so well and sort of put emerging markets up against developed markets over the last 6 months, but not the entire universe. Or you can look at it the other way. Look at developing countries versus emerging markets. Developing countries need trade, need economic growth, need cyclicality. Emerging market as an equity class are not developing countries. They're very, very different.
Victor, if what you say is correct, I'm incredibly concerned that policymakers, central banks are so far behind the curve, it is crazy. Because if what you're talking about is correct, this extraordinary, historic excess of liquidity and capital for economies and for markets, especially for the latter as well, are going to be ill deployed and they're going to lead to vast amounts of potential inflation if we do have those levels of liquidity that just need to find a home.
Yes.
The central banks are going to have to move aggressively to thwart that at some stage. Dare I say it, there might even be a new central banker in town who's talking about balance sheet reduction. I mean, goodness knows what that's going to do to that liquidity. Yes. So we're going to come back down to earth with a bump when the central banks start realising they've got a problem, aren't we?
Or they will never realise that they have a problem. In a sense, the same problem investors have, that they have no idea whether we're in inflation or disinflation, whether we're growing or we're shrinking. Maybe we're booming on Monday and going into recession on Tuesday. So given that all the cycles are so compressed, investors have no idea which way to go, neither do central banks. Because one of the things Kevin Walsh correctly highlighted, and that's what you implied, Chairman of Federal Reserve, one of the things he's right, we're living in a structurally disinflationary environment. One of the things that AI is doing and information age is doing, it reduces prices of everything, including humans,
well, that's not
to zero.
For a start, Victor.
To zero. No.
It's not reducing the price of water. It's not reducing the price of energy.
No, that's true. But what it is, we have a structurally disinflationary environment, but we have inflationary spikes. Inflationary spikes arises out of our decisions to do things, whether it's our reaction to COVID, whether it's our reaction to the wars, whether it's our reaction to politics.
Let's squeeze one more question in.
The takeaway message, really, what do we do then? Because you see areas of the market and you're saying, is the US equity bubble, is it sustainable? Talking about the valuation there. So what do we do in terms of buying?
To me, in equities, it's thematic investment. In other words, identify the themes that you believe are going to perform over the next 2 or 3 or 4 years. Identifying that one theme could sunset very quickly, but another theme is going to take over and is going to run.
What's going to take over at this point?
To me, it's all the applications that will be running on the back of AI infrastructure. Robotics, automation, quantum computing, biotech, 3D printing, all of that is yet to come as a major bubble.
What a lovely conversation. Thank you very much indeed for kicking off the show. We thoroughly enjoyed it.
Thank you.
And safe travels back to New York. Victor Schwetz, who is the head of Global Desk Strategy at Macquarie Group.
Meantime, let me tell you what's coming up on the show. The clock ticks down to launch as SpaceX prepares to go public this Friday. Reportedly, as much as 4 times oversubscribed. We'll delve into it. Plus, the UK government throws more than £1 billion into the chips race as it tries to position itself as a serious player in the AI space. And we're back out at Super Return with a titan of the private markets industry. Ares Management Co-President Blair Jacobson will join Annetta live from Berlin at 9:30 BST.
Executive Decisions is the new podcast from CNBC, where I ask powerful leaders about their decisions that changed everything. I'm Steve Sedgwick. Here's Miss Jo Malone, CBE.
I started that first business of skincare. That's when I knew that I was in charge of my own life. And that's when the entrepreneur really, although I didn't know what the word entrepreneur meant, that's when the entrepreneur really took hold.
That's Executive Decisions with me, Steve Sedgwick. Get it wherever you're listening to this. As I think we've said before, it's Elon Musk's world. We're just all living in it, certainly this week anyway. We are getting further reports on the extent to which SpaceX IPO deal is oversubscribed. Reuters saying demand could be as much as 4 times the planned offering size, with more than $250 billion on the table. This after Bloomberg reported that multiple institutional investors have placed orders for up to $10 billion each. Wow. CNBC sources indicate the company will stop taking orders today, backing up a Bloomberg report suggesting the cutoff will be when the US market closes at 9 p.m. London time. Index rules have been a key theme in the run-up to SpaceX's debut. That puts passive investors in focus as tracking funds, but they don't have any choice, do they? That's why they're trackers. And the like are expected to snap up as much as 30% of the float following rule changes by index providers. That's nearly 10 times traditional levels. Now, this according to analytics firm Entropic, which says these concentrated buying events could have a meaningful impact on price formation during the early stages of trading. Now, precisely how much is unclear, with Entropic raising the prospect of what it calls a reflexive loop, citing a Harvard study that showed a 7% take have an immediate effect, an impact on price of 5%. Anyway, you can find more on the SpaceX IPO. Plenty of stories there on the CNBC website.
U.S Aerospace announced it has signed a €270 million Series D funding round to expand its operations around the world and provide sovereign space capabilities for NATO and its allies. Daniel Metzler joins us now, CEO of ISA Aerospace. Daniel, thank you very much for joining us. And before we get into the weeds on some of the funding, let me just ask you about the company and how it comes at the space race, because we're all learning about space companies at this stage.
Absolutely, and thank you for having me. So, of course, space is a global industry. Space has been massively on the rise, especially throughout the last 2 to 3 years. And this is really where strategic decision making is happening. And so with ISA, we've been starting to build on this, especially with a view on industrialization, because building one rocket or building one satellite is one thing. It's yet an entirely different story if you want to build hundreds and thousands of them. And so ISA is really there to provide an automated way in fashion to actually produce those rockets, to get enough satellites to space, to really harness the power that space as a tech platform can offer us on Earth.
Daniel, you make the point, and this was your quote, space is no longer a frontier, it is the infrastructure of national power. What's the background to the motivation here? Is it a lot of states, a lot of nations saying, look, we want to have in-orbit data centers, or is it about the defense capabilities at this point as we have active conflicts?
It's all of the above. And so that's a nice thing about space. It is multi-use domain, of course. Defense use cases have been definitely surging throughout the past few years, especially within Europe, where we see that the continent needs to get up its defense spendings and also capabilities, because space is the ultimate vantage point. And you can pretty much monitor the entire globe on a near real-time basis from space. Now, on the other side, you have other technologies such as AI. And again, here we actually see where space and AI converge, with more and more people wanting to actually put data centers into space so that you can actually harness the sun's power much more effectively in orbit versus on Earth, where the energy first actually has to travel through atmosphere.
Daniel, SpaceX has a dominant position in many, many areas of the space race at the moment as well. And of course, NASA relying on them, and the West perhaps relying on them, and satellite communications relying on them an awful lot. Given our lessons of the last few years of national security on a whole host of issues, from energy to defence as well, is it wise for one area or one person, one company to have such a dominant position? Is it essential that Europe and others have alternatives?
Well, first of all, I applaud SpaceX for all the successes. And there's a reason they're really leading, is because the products they build are great. And so people actually end up buying them. And so on our side, though, I think it is especially critical for Europe and also other continents to actually have sovereign capabilities, because you do not want to have that single dependency, neither as you want to not have it within a company, even to not have a single dependency on suppliers. And so in that case, it is extremely important for countries to build up those capabilities. Now, with the tricky part that actually not many countries actually have access to the technology. And so that's, again, nicely the opportunity that we'll look at with ESAR is to actually build those sovereign capabilities for Europe, NATO, but also for our allies.
Daniel, I'm loath to ask the next question, but I always ask it in various sectors. How far behind is Europe?
I think we just probably started with the commercial space industry probably around 15 to 20 years after the US did. And so that's quite a bit of a head start. And on the other side, though, technologically speaking, Europe is actually very well advanced. It's really about now turning that into actual commercial successes.
Daniel, something that I was touching on yesterday when we were having a space conversation was the environmental implications, because so far the narrative has been, look, we need data centers in space because the energy needs on this planet are being challenged by AI, and we have this ready source of solar power. So it looks and it sounds on the surface very green, but the amount of rocket launches and the emissions attached to those rocket launches, plus the black soot that is emitted in space, they can have a deeper impact in the upper atmosphere than what you have on this part of the planet. That can have big implications for global warming. It doesn't feel like that's been spoken about enough. How do you feel?
Oh, so first of all, I would say we wouldn't even know actually about any environmental changes if it weren't for satellites in space. So actually more than half of all of those parameters based on which we actually determine the planet's health come actually from satellites and from space. So it's a necessity that we actually go to space. Now, if you look at the absolute numbers, the emissions of the global space industry make up less than 1% of the global aircraft and airline industry. So it's still a completely negligible amount. Even actually, if we were to ramp up launches massively, it is still a very, very small number actually of emissions.
Part, because what we're seeing on that side is that a lot of retail investors have been offered stake in SpaceX. They're lining up. We're talking about passives now getting involved because of the NASDAQ listing for SpaceX. So huge funding environment that seems to be changing around space. Has any of that had some bearing on you as you've gone to the market for a Series D raising?
Well, so definitely also the SpaceX IPO is actually pulling in lots of resources. So that's extremely positive for the entire market. Space companies generally are maturing. And so what we see now is also that more and more private investors who have invested and allocated capital into SpaceX throughout the course of the last 20 years are now actually becoming over allocated on their funds on the public side. So we expect actually that they will over the course of the next probably 2 to 3 years, sell some of those shares and put it back into private equities. So I think the entire space industry and also general deep tech industry will actually massively benefit also from the SpaceX IPOs, same as also from other IPOs, because space, again, as we see, is more and more also tied actually to the development of AI capabilities.
Daniel, it won't be lost on you in Munich that Herr Merz and Monsieur Macron have decided not to go ahead with the joint fighter project as well. And it's just another example of Europe failing to follow through on big projects because they're concerned about the losses. Now, clearly, losses and the big three AI IPOs, and including SpaceX, which are going to come to market, they're not worried about losses in order to get to market and get scale as well. Isn't this the European problem, that we fail to look further enough ahead and we fail to have the appetite for the losses needed in the short term in order to get market share gains in the medium term? Isn't space going to go the same way as the fighter projects and other areas?
So I think the main challenge that Europe has been having is that those big also technological programs, such as fighter jets, such as big space programs in the past, were primarily spread across Europe for political reasons, not because they actually made sense. And so I think that is now changing with the allocation of private capital. You can actually now build companies and build great products without the money really of the government in the first place. And so the government can actually look at what is out there and then allocate capital later on to just buy services instead of actually forcing private companies to work together, even though it may not make a lot of sense. And so again, I think actually the wealth and the abundance of private capital that is being allocated also into space, same as for defense, will massively boost also the capabilities of the European industrial sector because the products and the companies will actually build stuff that will make more sense.